Right, let's welcome on board Mayuresh Joshi as well and talk about some of these buzzers in trade. Mayuresh, hi, afternoon. What do you think is aiding the move in metals, and do you think it's sustainable?
Afternoon, Aisha. I think two, three factors that are clearly aiding the kind of growth that is now coming through for the sector as a whole. One, yesterday, Powell's statement, which is clearly indicating that at some stage in the second half of the next calendar year, rate cuts will be a given. That will give a boost, huge boost to the global economy, and commodities in general should see a huge comeback. The second element is around the same periodicity of time, large expectations are getting laid out that China should see the initial signs of recovery. And as those recovery signs become a little bit more eminent, the expectations in terms of restocking, which will start happening across the metal pack, whether it's ferrous, whether it's non-ferrous, will start boosting LME prices. So as demand comes back slowly and steadily as far as China is concerned, the expectations of a soft landing in the US, strong recovery signs that we are seeing in Europe, and holding out of macros and the expectations of infra spend in India, I think that is what is expected to keep volumes afloat as far as Indian companies are concerned. And with a sharp recovery in LME prices, the large expectation is that operating leverage should start kicking in from the first of the next financial year. So I think it's a preemptive move that you're probably seeing on a lot of these counters. But I think a lot of these domestic oriented companies, Aisha, as far as the metal space is concerned, should do relatively better. We had markets with India like Jindal Stainless. Yes, the stock has moved up along with the entire pack, but our entire take is the numbers were very, very good in the quarter gone by. The reported EBITDA per ton in excess of 20-odd thousand for the first half should show signs of improvement as we do the next few quarters and as a serious economic recovery takes place across the globe. And therefore, volumes, value-added products, the expectations in terms of better margins coming through and a better reported EBITDA per ton should probably raise EPS estimates even for the next financial year. I think general tailwinds for the sector, our top pick probably remains Jindal Stainless.
Mayuresh, what about IT as a pack? And given the kind of flare-up that you're currently seeing, perhaps catch up with the way the Nasdaq stocks have been performing, and especially in light of the announcements coming in from the Fed. For those who are underinvested or not invested at all in IT, you think it's time to buy?
So mid-cap IT, Aisha, has been a strong outperformer, and the outperformance continues even today in today's mood. So I think the huge move that you've probably seen in a large part of the mid-cap IT spectrum gets a boost, as you rightfully put forward, in terms of the comments from the Fed, the expectations of a soft landing, which probably means discretionary spending at the client end, specifically in these pockets of $1 million to 10 million, where a lot of these mid-cap IT companies work out with, that should have steady inflows. And a lot of commentaries are pointing to that. So they are not seeing any kind of pricing pressure. The demand still remains extremely strong and robust. And put these two factors together, the dollar and constant currency revenue growth expected to be stable. A large part of the wage hike is behind us, and therefore the EBIT performance should be relatively better in the next few quarters. Valuations obviously are sky high as we speak, not just compared to their own median averages on what mid-cap IT used to trade 5 years back, but even the discount, rather the premium has probably widened between mid and large cap. But yes, anybody who's not invested, to answer your questions, can start with small tranches within the space, within the mid-cap IT space. We do like a couple of names which you hold in our global lists. Cyient is something that we continue to like because of its diversified book, expectations of stable revenue growth. And Firstsource Solutions probably meets a lot of our criteria in terms of revenue expectations, capacity utilizations, decent amount of DSO days, and a decent amount of diversified book as well. So I think Cyient and Firstsource can be accumulated on branches by fresh investors.
Kunal, is it a no-go for the benchmark large cap IT names, your TechM, Infosys, TCS still?
No, I think it's a definite go, Aisha, for the large cap IT stocks. In fact, what I'm actually liking is not that so we of course have discussed TCS, Infosys earlier, that how I flagged off that these stocks are getting into a breakout of a swing pattern for their respective charts. But I think what I also like is Wipro making a comeback. I think that's been a huge underperformer from the large cap IT stocks. I think at 425, 430 where the stock is trading, it is looking a much more stronger chart than what it has been over the last 1.5 years for itself. So that I strongly believe that if the large cap IT stocks have to make a comeback, I think would not be an underperformer in this leg, and it should probably get back into line of at least an at par performance with the large cap stocks or much better performance. So my sense is that I would probably expect the stock to come back towards 480, 500, possibly in the next 1 to 3 months.
Okay. A block deal on Bandhan Bank, by the way, about 0.3% equity changing hands there. There's also a lot of activity within the realty pack once again. So Godrej Properties holding up a solid 6.5% nearabouts in trade. And of course, the others are all from the metals and IT pack. But Naresh, any fresh ideas within realty, you think?
So in real estate space, Godrej Property is the one which looks promising for the fact that it is a stock which has still not gone back to the highs made in 2021. And it's been a slow and steady move in the last 2 months. It gave a breakout of about 1750, 1780 levels. Today, it has barely reached around the 2000 mark. So this is a stock where still the risk reward fits in. One can keep a stop loss below 1900. And the momentum, if it continues, it could take it towards the 2300 to 2500 mark. Rest of the names have already moved up quite a bit. The only options are to go a little more towards the small cap side. So something like a Kolte Patil or a Ajmera Realty, which have been sideways in the last 1 month, could be interesting.
That's the take coming in on realty. Mayuresh, realty has been the best performers year to date. Do you think stocks have run ahead of the fundamentals, or would you say that this is a multi-year cycle and there is still phenomenal money to be made here?
Yeah, so I think if you go by the previous historical cycles that real estate has gone through, obviously it remains to be a 6-7 year old cycle, and we are in the middle of that range, and therefore there are still some legs to go. Obviously, the tailwinds which are aiding the kind of growth that you've probably seen, which are getting reflected in numbers. Pre-launches are getting very well accepted, specifically the premium and the ultra premium launches. You've seen examples like DLF, an example in Kolte Patil as well. And therefore, I think new launches getting very well absorbed by the market itself. The second element in terms of unsold inventory has come off significantly in the last few quarters. And with a rate cut cycle, again, that can get initiated. All these rate sensitives will be back in focus. So yeah, more legs to probably go. A lot of companies have deleveraged their balance sheets to a large extent. And therefore, the kind of earnings momentum that one can expect from these stocks can very well continue. Obviously, I think historical valuations and where they are trading at the juncture are fairly valued as we speak. But if earnings are expected to come strongly in the next few quarters, my own sense is that the momentum can very well continue, assuming we are in the mid of that cycle. Stocks like DLF, Godrej Property, if somebody is holding, definitely hold on. But even within that mid-cap range, you can probably start scouting for stocks which can also have some element of budget connotations to it. So obviously, I think the interim budget will have some focus in terms of affordable housing. And with affordable housing, again, taking precedence as far as budgetary allocations are concerned, a few of these stocks can very well in momentum. So something like a Brigade can definitely be kept on there.
Taken, but of course Infosys is one stock at the index level which is contributing the most because that stock is up almost 4%. But Reliance also actually saw some large trades happening. That stock is higher by over 1%. And HDFC Bank too is in focus because tomorrow there are some readjustments which are expected, and that means there could be inflow to the tune of $450 million. We'll get Somit shortly to join us to talk to us about what those rebalancing are. But before that, Naresh, tell me your view on Reliance as well as HDFC Bank.
So both have been a slow and steady mover. If we look at Reliance Industries, 25 or 2475 was the high a few days. 2475 was also the breakdown point back in August, September. So that is the price point I would be watching out for. If it sustains above that, it gets into further momentum and could even go and test that 2600 mark. So overall, looks like a flag formation here. Has come close to that 2475 mark. If it sustains, could see follow-up momentum. HDFC Bank has finally made that recovery back to the highs of 1650, 1670 of the last few months. But the problem remains, if we go back all the way to 3 years, 1650 to 1700 has been a tough area for the stock. So a longer term bull market or a major trend change happens if it starts sustaining about 1700 on a weekly basis. So at current levels, it's too early to call that. So Reliance Industries looks a little more promising than compared to HDFC Bank.
Okay, in fact, since Anisha just flagged off that FTSE rebalancing, let me take it across to Soumit and find out exactly what are the names which are going to partake in this, and more importantly, what's the fund flow action we're likely to see.
Well, multiple rebalancing events tomorrow. In fact, to be precise, 3 of them. Firstly, when it comes to the Dow Jones ESG index, Embassy Office Park REIT, JSW Steel, UPL, Godrej Properties and Macrotech Developers are being added to the Dow Jones Sustainability Emerging Market Index, while in the Dow Jones Sustainability World Index, 3 stocks are getting added, that is JSW Steel, UPL and Dr. Reddy. When it comes to FTSE, around $525 million of inflows are expected in selected stocks. Firstly, it's Nexus REIT, where around $9 million of inflow are expected to come in, which is nearly 28 times its average daily volumes. In Mankind Pharma, around $28 million of inflows are expected, which is around 5.5 times its average daily volume. Now, these 2 stocks are getting added into the FTSE indices, while there are few stocks whose weightages will increase in the FTSE index, and that is HDFC Bank. Firstly, $451 million of inflows are expected in HDFC Bank, around 1.7 times 20-day average volume. Apart from that, there is Sheela Foam and Nazara Tech, which could see inflows of anywhere between $1 to $3 million. Now, a couple of stocks where the weightage could reduce, that is 361 and Delivery. Outflows of around $3 to $10 million are expected. And the last rebalancing event would be in the BSE 100, which is a very actively tracked index of the BSE. And there are 7 stocks that are getting added in the index, that is PFC, Hindustan Aeronautics, TVS Motors, Yes Bank, Persistence and APL Apollo Tubes and IDFC First Bank. And 7 stocks that are getting excluded from the index are Adani Power, Tata Elxsi, Emphasis, Voltas, CG Consumer, Bandhan Bank and ACC. So keep an eye out for all the stocks in trade, because there could be some movement in trade tomorrow, given the fact that there would be inflows and outflows in these stocks.
Mayuresh, as we pretty much would start winding down the year, any pockets you think wherein the fundamentals or rather wherein the valuations have run up ahead of the fundamentals and one now needs to ease out within the pockets?
So I say, is it the power space that you're speaking, or
Are there any such pockets? Power, of course, came from you.
yeah? Sorry, I lost that. If you can repeat it, I'm extremely sorry.
No, I'm just wondering if there are any pockets of exuberance, froth in the market that you foresee, wherein the valuations may have run up ahead of the times and the growth projections, and you would say, take it easy, sound the alarm bells or warning signs here and recommend profit taking.
I think most parts of the markets have run up quite a bit. So to that extent, to a large extent, if you probably look at the entire FMCG story as an example, right? The take here is that the growth will keep on continuing. However, I think rural markets, as we see it, still seem to be under stress. I think the kind of gradual recovery can only start coming through from Q4 and the expectations of a good Kharif season coming through. Obviously, some MSP prices will get announced as we head into general elections. But generally, the volume growth seems to be very, very tepid. And that will probably reflect on Q3, Q4 numbers. The consumption index, specifically the FMCG basket, has also run up with the market. But I think the street might be disappointed if the volumes are not in tandem with the price moves that we've probably seen, and valuations are in no way, have never been cheap and are no longer cheap as we speak. So remain a little bit cautious within the consumption basket on the FMCG space. It all depends on how numbers will play out for these months.
Okay, point taken. So that's the space which is looking that it might enter the over exuberance stage, but what is showing quite a bit of exuberance in the market is Hudco as well. That stock is up 13%. IREDA yet again is higher by 8%. It's 120 rupees now. Remember, the issue price was around 35 rupees. It's been a 4x stock or a quadruple in terms of the valuation within a matter of 1 month itself. So The ones who've gotten the IPO are definitely very happy about that. Sonata Software higher by 8%. Castrol India, that stock doesn't move so much usually, but that stock is higher by around 7%. And then M&M Financial and Manappuram Financial are the other one which are also doing okay. But let me ask you about the NBFC space, Mayuresh. With this entire rate cut cycle happening, do you think there could be an added trigger for these names, or do you think that in terms of the growth rates, they've already peaked, they're getting in the fresh money as well, so maybe the best is behind?
No, so I think they are penciling in to a large extent, Anisha, large part of the moves that are now getting reflected in price. But with the rate cuts, obviously NBFC players also benefit to a larger extent because the kind of leverage that they can then start giving out with lower rates can be substantially higher than what we speak. Obviously, the NIMs and spreads, which have seen some element of compression, revert back to means, and that creates a positive multiplier effect as far as return ratios are concerned. Having said that, I think the quality names within the broader NBFC theme, names like a Chola, is something that we continue holding on to our global focus lists. Shriram Finance is something that we continue holding on as a clear disclaimer as well. The recent RBI circular also is going to play its part in the next few quarters till the rate cut cycle probably assumes. Shriram Finance, just as an example and a case of point, has only 4% in terms of an exposure to unsecured and personal loans, which are also very adequately covered as far as provisioning is concerned. So in lieu of all these factors, assuming growth to take precedence again in the next few quarters, NBFCs will be in the limelight. But specific qualitative names, leaders within this pack, is something we continue liking. Names like Chola and Shriram Finance as a discussion.
Right, okay. Let's get in some BTST trades as well before we wind up for the day. Kunal, what's in your list?
So I'll go with a few high beta stocks over here. Indiabulls Housing is the first one to suggesting as a buy, expecting the stock to get into a very big breakout mode about this 210, 212 mark where it's trading right now. So 240 as a target for Indiabulls Housing. Stop loss to be kept at 200. And Balrampur Chin is the other stock which has been struggling quite a bit in terms of the underperformance. But on the hourly charts, there are two positive signs which are emerging for the stock, a bullish RSI divergence for the stock on the hourly time frames, as well as a formation of a bullish candlestick pattern today on closing basis. So would suggest a buy with 410 as a target, stop loss at 375.
Right, Naresh, what about your BTST trades?
So both being banks, the large cap ones. First is the buy on SBI, which is very close to a new all-time high, expecting it to cross soon. Stop loss at 618, target price of 635. Second is a buy on IndusInd Bank, a new 52-week high here. Stop loss at 1538 and a target price of 1590.
Okay, let's begin winding up then for the day. Today, of course, the day belonged to IT, that gap up start, and we managed to latch that. In fact, we're closing in pretty much at the high point of the day. We're staring at a near about 280 point rally on the Nifty futures. We've already made it to that 21,300 print there. Technology, so led by TechM, LTIM, Infosys, which surged about 4%, Wipro up 3%. These have all held out very smartly. Of course, Emphasis, Naukri, these were some of the other names along with Persistent, which did manage to close in at a live high for itself. There's also been Bajaj Finance, IndusInd Bank, ICICI Bank, Reliance. So the large caps as well participated in today's move. There was SAIL, Indus Tower and Naukri, which were some of the other names which held out as well. So picture perfect market, strong global cues, and we rose up with the rest of the world markets as well. But let's see what tomorrow throws up at us, what sort of cues we start off day with. We'll wind it up right here on this edition of Closing Trades.